So April 2nd, Phil joined us as our president, and so we're going to have a bit of a question and answer period right now. We have a number of questions designed for me to ask Phil, but just before we get going on the questions, I'd like to call Phil up. Phil, come on up, and maybe you want to just tell some of the people a little bit about who you are.
Just a little bit about myself. I started in the industry in '83. Many of you might know that, some may not. I started off in sales. I came out of university. I majored in accounting, got my Bachelor of Commerce at Concordia, and started working in sales. Well, I was limited because my minus 10 years wasn't a very attractive market for me to work in. So I started focusing on the plus 30 years. And so I started in sales and got into management for Crown Life and as a regional training manager. Moved over to Canada in '92. And then essentially as a wholesaler and responsible for Eastern Canada, 1999, actually it was fall of '98, got appointed as the Vice President of Sales for Canada. And we went through this mission and moving the organization, because we couldn't compete in the career distribution system, moved it to an independent world. So we took it from an organization that had heavily invested into real estate and into management. And we made a switch and changed our costs from fixed costs to variable costs, and we opened up in the independent world. And quickly we changed our procedures and processes because anything that came to us got lost. And so we went through this whole place of limit the amount of people that actually touched an application, give accountability, and so our whole new business process went to a case coordinator model, which became the norm in the industry. In 2003, we got acquired by Great-West Life, and I moved to Toronto in August of 2004, and I was appointed as Senior Vice President of Canada Life back then, and I stayed till 2017, and now I'm here. I got my CLU, I had my financial planners from the Institute of Financial Planners in Quebec. I've since given that up because I don't practice necessarily anymore, and trying to keep my CE credits in Quebec was a bit of a challenge. And then I joined IDC in April of 18. I'm really interested in finding out what are your concerns. I'll answer any questions. Some I may choose not to answer, but I'm open to anything. Independent advice is critical. I mean, when you start thinking about the whole history, the whole world in everything, it's about consumer has choice. In every industry, it's gone to the world where a consumer can decide to buy what they want, when they want, and how they want. They can do it online, digital, there's been disruptions. And I think in our world, it's the same kind of deal. So you think back in the 80s, a lot of the smaller companies got into Canada and started introducing different products that made it to the customer, more attractive, innovative. So when people talk about disruption today, the industry got disrupted when disruption wasn't a word, if you think back into the 80s. And so independent advice was good. And the career companies, for the most part, there's still a couple that do really, really well, London being one of them, Sun is another one, IA in Quebec. They basically say, no, we can't compete with all things. And so advisors have the luxury of trying to find the right product for the right client. So independent advice is critical. The fair treatment of consumer, you start listening to the conversation that Eric had put up here about, the advisor disclosure, the reason why letter. That's all good. And when you get in front of a client and you propose a product, you're free to answer when somebody says, who owns your company? Even though it's the right product, it's one question when you're an independent you can avoid to answer. You don't have to go to that question. So even though it's the right product, you don't have to put any doubts into your clients. Because if you think back when you were a career and it'd say, is that the right product for me? And you'd say, yeah, it is the right product. It's the only product I can sell, but it's the right product for you. So as an independent, we're owned by Guardian, as you all know. It's a publicly traded company. It's not an insurance company. And so any product on our shelf, we pretty much have every single company that does business in Canada is on our shelf. And you have access to all their products. And as an MGA, we don't really care which company you choose to support. Because no one company has all the answers for all your clients at every single age. So I think it's really important that the independent advice it's part of Canada, it's part of the industry, and it's the same thing. There's lots of blogs on that, and how do you protect the advisor? How do we make sure that we're relevant in the marketplace? Consolidation, it happens, and it doesn't matter what industry you're in. Just yesterday, Goldcorp was announced that they got acquired, right? Or there's a bid on to buy Goldcorp. Gold producing company has been around for how many years? Stalworth, et cetera. So consolidation has happened. It's been happening in the manufacturer level. It's happened at the advisor level, and it's going to continue to happen at the MGA level. You get to a point where with everything that's demanded on us from a digital perspective, technology, compliance, product training, know your customer, at one point you need resources, you need scale. Like you think back at the insurance companies, like I said, some of us got out of the business of the career system. We didn't have enough scale. We couldn't support it. You can't be all things to all people. So organizations, I think, you're going to see a gravity towards these larger MGAs. There are going to be some situations where you have, in my view, like true producer groups, where they're going to basically work with one or two carriers, and they might form their own organization. I can see that happening down the line, but for the most part, I think you're going to have either large MGAs. They're either going to be owned by insurance companies, or if they have the right owner, right structure, will be independent. So independence, again, is really strict. It is really important for us. I think the insurance companies will continue to buy and look to buy other MGAs. Will they force you to sell one product? I can't really comment on it, other than it's a strategy. They can use that strategy, and I think that will help the independent attract more advisors, because as independent, you want to write the right product for the right client, and I think it opens up, and that's the space we want to play in. Like, we want to play in that space. And somebody's probably thinking out there, okay, so when's IDC going to be sold? Okay, I'm sure you're thinking it, so let's deal with that question. Well, the interesting part is we're not for sale, and that is one of the key reasons why I did join IDC. But I made the choice to join IDC, and I'm 100% convinced that we are not for sale. Down the line, and again, publicly traded company, but it is controlled. The voting shares are controlled. So even if an organization wanted to take a run at us and say, well, IDC, you guys don't want to play, let's take a run at Guardian, it's not going to get them anywhere, because the controlling voting shares are held by a family. And they got assets, they're young people, they're looking at this long term, they believe in the advice channel, and we are a big part of the whole Guardian portfolio. So hopefully that answers the question. So I'm a believer that, the majority, the grand majority of people all do the right thing by their client. So the real thing with compliance is documentation. I don't for a second believe that anybody in this room is doing what's not right for their client and only thinking about their pockets. Because if you would, you wouldn't be in this room, right? So you want to learn, you want to grow. So compliance is not a scary thing. Like, we can make it seem scary, but cut it right down to the basics. And you look at what Eric was showing up about that reasons why letter. That's pretty good from your perspective. Like, your client, they buy the policy, and I've been in situations, I remember back when I started, and even when I was selling, that you go see a client, and they're happen to be in 55, 65, they're starting to convert, they're leaving their group coverage and saying, I have no insurance. How come no advisor told me about it? I could have got this whole life permanent insurance or UL, whatever it was, back when I was younger. Look at the rates now. This is ridiculous. Hey, we know that's not true. We know that's not true. I've lived it personally with some family members of saying, well, you had the option. You thought your association coverage was a lot cheaper. How's that worked out for you? So compliance is not scary. It's documenting. Make sure you know what your client needs. What's their situation? And you think back of all of our training. What do they teach us? Find out, know your customers. Ask the soft question. What are your goals? What are you going to be? How do you see it down the road? What are your objectives? Okay, that's great. Where are you today? How are you going to get there? Let me help you plan. There was a study that's been out there from Serrano, 2.7 times your assets. It's not because we're smart as advisors, but it's because we can lead a customer from one place to another. We can coach them along the way. And so when they come and they have a goal of saying, I got to save so much money for my retirement or to purchase a home, and all of a sudden they come Christmas time and I'm going to take a holiday, you start to ask the question, well, if you had no plan, you could take the money out of your bank account, it's your money, you can do whatever you want with it. As an advisor, you're basically saying, what's going to change here? Your plan was to accomplish this objective. You know, it's on a seesaw. So if you're going to withdraw here, something else is going to happen somewhere. So look at compliance as a positive. Look at it as a positive even if you want to sell your practice. Like if I was to come in front of you today and say, I got 2 books for sale. One, all you're going to find in there is the application and a copy of the illustration, and that's all. And I got another file, another advisor, Greg, wants to sell his block, and in his files, client files, application, illustrations, notes about the meeting, rationale about, you know, we need a needs analysis, you need $1,300,000, we only put in place $500,000, we spoke about CI, you weren't interested. Which one are you more likely to pay, and which one are you more likely to charge a premium for? So for ourselves as advisors, the better we document our files, the more our practice will be worth down the line when we want a succession. You know, the majority of the business now is going to no load. I've been a big proponent of, although there's risk from an MGA and there's risk from an advisor perspective, I've always believed that you keep compensation and client fees as 2 distinct parts of the conversation. One, you all have bills to pay, you all have to earn the income to cover your lights, rent, etc. So you need some upfront commission, but that shouldn't be to the detriment of the client. Right. So if you keep the DSC to the client, no load, and then some companies have started to introduce this hybrid model where they pay up front, but there's a chargeback period, you're taking on some of the risk. Let's not penalize the consumer. The consumer, if you think of the whole seg fund, like when I started in the industry, there used to be an upfront sales charge. Like you go see a client, give you $100,000, and they invested $91,000. Because right up front, right? Then it evolved. And it became, okay, we're not going to do that. We're going to do, if you give us $100,000, you're locked in for a 7-year period on a declining balance. Then it went to a no load. So that whole, it's evolved. So I think there's a lot of business going through the no load basis. This hybrid model will be interesting to see how many advisors actually take advantage of it, where they pay some upfront commission, trailer right away, but there's a chargeback period. That's the seg fund industry. Annuities, I don't think there'll be any change there. I think annuities do play a place in the marketplace because we want to cover the basic needs of individuals, making sure that they can spend the rest of the money if you have a strong annuity payment out there. Not 100% of your money should go in annuity, but not 100% of your money should go anywhere else. On the insurance side, it's a discussion that's ongoing. Personally, do I see compensation disclosure on the insurance side happening in the next 5 years? I don't think so. I really don't. And if there is any hybrid, levelized commission would work well for advisors as we build our practice. Carriers have tried it. It doesn't really work well. I mean, if all the carriers stopped selling insurance today, they'd be very profitable, but they wouldn't have a business 8 years from today. So if you think some of the companies that went to a levelized commission, one of the biggest challenges was how do you motivate advisors to sell more business? So that's a bit of a challenge. If there's a modified hybrid model that comes out, I think it will start off at the larger cases first and not necessarily at the mass cases. That's my personal view. Who knows? I don't have that crystal ball. None of us do. We're a large organization. We last year settled probably more life insurance premium than some carriers have done in Canada. So we're not a small company. We're a large company. And we got presence across the country. And we just got to make sure that we can leverage off our brand. What happens in one part of the country, it happens somewhere else. So I'm trying to instill that confidence. Trying to instill, accountability. That we're all accountable to the advisors at the end of the day. We got to make sure that we're dealing with the right advisors as well. If, with the risks that we undertake as well from a compliance perspective, I want to make sure that I understand who our advisors are. So I want all our people to know who are we dealing with. Because if something goes wrong, if somebody gives us 5% of their business, like how much focus do we have to spend there? Unless it's huge premiums. Otherwise, let's focus with the advisors who are committed to IDC, and that's the people we're going to focus with. I think we got to, again, like I said earlier, we can't be all things to all people. So we can't just add product to our shelf in services if we can't support it. I'd rather have a more limited product shelf in terms of services we offer, but that we get committed to it and we enforce it. I think those are some of the things that I've changed or started and still in change.
Yeah.
Others would be a bit of a shift even in our programs. We got to bring up our education level, our events a little bit higher. I hope you'll find this today to be worth your money. Time is money. Time is money. So we want to make sure that when we have events that you actually get something out of it that you can apply to your practice. So we're probably going to do fewer of these larger sessions. We do the one here. We'll have a university day come spring. And then we'll focus more on focus groups. I think it's going to be more interested for us and for you to start looking at getting, like-minded individuals to work together, 10, 12 people, get a product provider to come in and really get into the details of a concept, of a product, so you can understand the details. It's hard to do that in a room such as this, to have, a couple of hundred people and say, we're going to talk about par insurance, we'll go through the details, because the knowledge is all over the place. So I think we want to focus more on those smaller groups and communicate more. I think, like, we look at conferences as an example. I think it's the best kept secret. We have VP conference and a president's conference, and we usually let you know once you've qualified. But I think we got to do a better job of communicating that we have a conference, what's the period, how do you get there, etc. Automation is got its place. I'm a true believer that automation will not replace the advisor. There's not a chance. And I look at this from, the wealth side. Everybody looks at their bank account, they all want to trade, they want to make the smart move with stocks, etc. On the insurance side, people buy their insurance policy, they put it away, and they never look at it again. So they don't, most clients don't go online trying to say, what's my death benefit today versus yesterday, what's my cash value today versus tomorrow? It isn't. Automation will help you as an advisor to attract, to prospect. So it changes. Back in the day, we used to do direct mail, mass mail campaigns, send letters to clients, ask them to respond. If they didn't, do a follow-up. Well, you can use digital to that perspective. Digital can help you be more available, more easy to be found by a client. It's a good source of referencing who you are. If you're working with your clients and they post a comment about the services I have received from this advisor, and here's the benefits. So when people go online today and say, I'm looking to buy insurance, anybody have a trusted advisor? Make sure your name pops up so it's visible there. Where it's going to help is, I think, streamlining applications. We joked before, but applications, online applications, we're seeing a trend of a more uptake. It's going to be important because it helps. It helps through the process. It helps with the accuracy of information that gets into the carrier. It helps with just simple things such as spelling, so there's no rework. Like a policy doesn't get issued with the wrong name, with name spelled wrong or beneficiary wrong. It speeds up the process because you can't submit the application unless it's fully completed. So there's less back and forth with the advisor and the carrier. It can help with the service, providing you access to information when you need it. So whether it's investments or insurance, you can start looking at, deal with your clients and go on your mobile and say, okay, Greg, you were looking for, we're doing a review, your policy is worth X. It helps you be better prepared and be more efficient in your business. So I think automation helps, has a place in our industry. It just won't sell on your behalf, I don't think. Apexa is this, it started off with this contracting, and essentially it's the 4 major MGAs, ourselves, BPI, Financial Horizons, and Hub, as well as 5 carriers, Canada, Sun, Manu, Empire, and IA. We're trying to say, how do we streamline this process of contracting? And I know it's going to be painful short term, but it's going to make everybody's lives a lot easier as we go forward. And it's all it is online contracting. So you go online, you get all your documents, they get uploaded, you complete the form once, and it gets distributed to all the insurance companies you do business with. And that is where, where the industry is going. This is a really important one, as regulators want to try to create their own models, and we're saying, no, let us do this. And in the industry coming together and actually putting this in place, because it helps. It helps also to identify, the 2 or 3 bad apples that we have in the industry that give the industry a bad name. So this is where technology will help with contracting. So short term might be a little bit more painful in making sure that you have all your information online, but long term it's going to make your processes a lot simpler when you want to contract and renewal. Like we all know when you got to go for a renewal process and it's, okay, now what do I do? Where do I get this going? Why do I have to send this to one carrier and to the other carrier and to the other carrier? Apexa will simplify that whole process so you can do it once and it's shared automatically with all the companies that you do business with. Non-face-to-face definition, in my view, has changed. Like, think back of when we started in the industry, at least when I started, one of the first things they told us, we were the field underwriters. We were the ones that actually got in front of a client and we were able to identify that, yes, the client is standing, yeah, he says he's 6'4", 180 pounds, yeah, that's about right. You guys question?
He's wrong about the 6'4" and 6'2", actually.
Well, non-face-to-face, now I just got to go like this, put it up in front of me, and I can FaceTime anybody who's in this room, because we usually do that. Why would we talk face-to-face when I can use my phone? And we can go online. So non-face-to-face, I think, has changed the definition. I do see you being at your office desk, your client being at their desk at home or the office, and now saying, okay, I see you. Yeah, Greg, yeah, you're right. I was wrong. You are 6'3". And I started inputting the information, and I can do some of that underwriting. So I do believe that happens. Some companies in the U.S., I'll take it a step further, they've actually gone to a place where technology is like you put your finger on the screen, like recognition, and they can tell you whether or not you got diabetes or some other form. So yes, it's going to evolve. I see that absolutely. Whether it's going to be dominant, I don't know. One thing is for sure, in Toronto, if you're trying to go from one part of the city to another, make sure you plan well ahead, right? So it'll cut down on those expenses. But it won't, that I don't see happening in the large cases, right? But when you're going to sell term for $300 a year, you're not going to drive for 2 hours to go. So how do we better serve the population? And some of it, even with the electronic apps, you might do, Skyping or live, I just face-to-face on the phone, and then go with the application. Have them complete the application while you control. So there's access to computer. Like lots of opportunities are out there. We're not there yet, and we're changing. We're still going around with those thick paper applications.
Yeah.
Any other questions? I'll be around for a little while, but at any time, if you got any comments, questions, because I'm really interested in your feedback, what can we do differently? Don't hesitate, whether you're talking to one of our IDC people that work with us, or send me an email, or give me a call. I will get back to you. It might not be immediately if I'm tied up or out of the city, but I will get back to you and we can have a conversation, any topic you like. Thank you for your time. Thank you for your support with IDC. I wish you all a great 2019.